One of the most common questions in trading is also one of the most misunderstood. Is trading gambling or is it a profession? Most people think this question has a simple answer, but it does not, because trading can be gambling, and trading can be a profession. The difference is not the market. The difference is behavior. Welcome to the Phantom Trader world, where clarity comes before execution. Gambling is defined by randomness and hope. You take a risk without control, without structure, and without a repeatable process. The outcome is largely out of your hands. Trading becomes gambling the moment decisions are driven by emotion, excitement, fear, revenge, or desperation. When someone enters a position without a clear reason, without knowing where they are wrong, and without accepting loss in advance, that is not trading, even if it happens inside a financial market. A casino works on probability, but the edge always belongs to the house. In professional trading, the trader's job is to build an edge and protect it. This is where the idea of a profession begins. A profession is not defined by income. It is defined by structure. Doctors do not cure every patient. Engineers do not prevent every failure. Pilots do not control the weather, but they all follow systems, rules, and risk protocols. Professional traders operate the same way. They do not try to win every trade. They try to survive every trade. They define risk before entering. They accept losses as part of the system. And they focus on long-term consistency, not short-term excitement. This is why two people can trade the same market and experience completely different outcomes. One treats it like a slot machine, increasing size after losses, chasing price, hoping for recovery. The other treats it like a business, limiting exposure, following predefined rules, and stopping when conditions are not favorable. The market does not care which one you are, but the outcome will. A useful way to understand this difference is to look outside financial markets. In games like chess, both players follow the same rules, but skill creates asymmetry. In games like poker, luck exists in the short term, but skill dominates over time. Trading works the same way. Random outcomes exist, but behavior determines long-term results. This is also where many people confuse trading with gambling, because losses feel similar. But losses alone do not define gambling. Lack of control does. A professional trader expects losses, plans for them, and limits their impact. A gambler is surprised by losses and tries to escape them emotionally. This distinction is uncomfortable because it shifts responsibility. If trading is gambling, losses are bad luck. If trading is a profession, losses are feedback. That feedback is what allows improvement. The market itself is neutral. It only reflects behavior. So the real question is not, is trading gambling or a profession? The real question is, how are you treating it? If this video added clarity to how you see trading, support this work. An interaction tells the algorithm this foundation matters. A subscription tells me to keep building it with you.